We begin our index studies session with the Nifty. This week, the Nifty could not take out the 22,000 mark. It did make an attempt, but finally it couldn't really clear. It came down and closed at 21,782. It isn't as if that things are very bad, because the 9-day moving average as well as the 20-day moving average, they are not taken out. The 9-day exponential moving average is at 21,764 and the 20-day moving average is at 21,698. So both the moving averages are below the closing level. So that way there is not much of a negative scenario emerging. On the other hand, these two channel lines, the downsloping channel lines, they would act as a support. The lower one is coinciding with the 50-day moving average at 21,316 and the upper one is currently located around, say, 21,575. So given that, we would say that unless the Nifty falls below 21,600 levels, there would not be much of a concern. The concern will happen only if the Nifty falls below 21,300 level. The weakness in the Nifty is mostly contributed by the highest weighted stock, that is HDFC Bank. HDFC Bank is now commanding near 11 percentage point and followed closely by Reliance at 10.1%. So we now witness one thing in the market, that when HDFC Bank falls, there is buying in Reliance that is counteracting the fall in HDFC Bank. And if HDFC Bank doesn't fall much, then there is not much of a major selling pressure. And the selling pressure is actually coming from the bank stocks and not so much from other areas. That's why we see a sideways kind of a movement. In any case, 21,600 to 21,300, this is the major support range. So long as this is not broken, there would not be any immediate threat. And as for the long-term uptrend, now you can see a deep green trend line and the 200-day exponential moving average, both are in a similar kind of a slope. Deep green moving average suggests that unless 20,000 mark is taken out in any kind of an intermediate uptrend, the Nifty is not going to sacrifice or not going to get into a bearish mode, at least for medium to long term. So any correction that is happening is a course correction. Before it hits 20,000 levels, there is a support just about 21,800, 21,900. So 21,000 to 29,900, that range will also act as a support because of the two straight line drawn in black joining the two earlier highs. That also acts as a support. So there is a lot of concern that is being made out that the Nifty is gonna fall and it is becoming bearish or something. There is no major technical reading that can be made that immediately there would be some kind of a big fall. Only concern is this 14 RSI is currently at 54.56. If it stays above 60, if it can manage to get past the 60 mark again, then even that concern will not be that of a problem. There is a negative divergence, but this negative divergence has to be corroborated by price action and be concerned only if 21,300 level is taken out decisively on heavy selling. This index we have never covered, but we are covering it for the first time, that is the Nifty Jr. Nifty Jr I have taken because just to show that the next 50 stocks, it is the next 50 stocks, the index is based on that. This gives you an idea that without getting influenced by highest weighted stocks like HDFC Bank and Reliance, these are the next 50 stocks, they are different stocks altogether. How are they behaving? What are they doing? They are actually showing continuity in the uptrend, and they have posted, this index has posted a new high, and in the closing new high is 57,432. So this is going up since November. There had been corrections, but this is much more. This is displaying a greater strength. This is displaying confidence. The weakness that you see in the Nifty is contributed by the bank stocks, primarily HDFC Bank. Because of that, the Nifty is seesawing, Nifty is moving in a sideways manner, whereas the Nifty Jr is actually giving you the idea that the next 50 stocks in the Nifty are in a strong uptrend, and there is no sign to say that the Nifty Jr is going to create any problem. If you talk about the oscillator reading, yes, there is some concern that there had been negative divergence, but look at the last movement here. The RSI is actually getting past, it is still 72.10. So fresh climb up is happening, so that earlier negative divergence effect is not being seen, not visible out here. The other thing is that throughout its movement, barring a little bit of problems in the month of January, this Nifty Jr has not fallen below the 9-day exponential moving average, which is currently at 56,433.41. It is comfortably above that 50-day moving average, although on the last day it did test, but it bounced back in a strong manner. So the bullishness continues. It might as well continue so long as the 20-day moving average, which is located at 55 to 54, that doesn't get taken out. Now we come to the Bank Nifty. The Bank Nifty has closed at 45,634, and the Bank Nifty staged a late rally in the session on Friday, and it has given a counteractive green candle, but we need to see whether this manages to get past 45,655, that is the 9-day exponential moving average, and thereafter 45,972. That means we need to see the Bank Nifty taking out 45,650 to about 46,000 mark. If that were to happen, then Bank Nifty will acquire fresh strength. Otherwise, there can be more problems. But now the 200 exponential moving average, which is located at 44,674, if 44,674 doesn't get taken out, then Bank Nifty survives. Bank Nifty has been ably supported in the recent past by the 200 exponential moving average, either on a test or coming very close to it, just as we saw on the last two trading sessions, that it came very close, but it did not fall below, say, 45,000 on a sustainable basis, and the 44,674 reading of the level of the 200 exponential moving average has not been taken out. Even if it were to do so, unless the 43,000 mark is broken, we cannot say that the Bank Nifty is in for a big fall. And watch the stock of HDFC Bank. If it manages to get past key levels, sustain above 1400 levels, then there would not be much of a pressure. This is the stock that is creating a lot of pressure on Bank Nifty. Apart from that, we can see some kind of a recovery if the Bank Nifty manages to get past the 46,000 mark. 46,000 mark on the upside is a critical area that you need to monitor, and on the downside it will be 44,650. That should be monitored very closely, because the 200 exponential moving average is located at 44,674, and if that happens, there can be further fall, and that fall, if it takes down the 43,000 mark, then there will be more problems. Only when the bank Nifty gets past 47,175, then think of a sustainable recovery. Otherwise, it can remain a range bound index where the 45,000 mark or 44,650 on the downside and 46,500 to about 47,000 would be the upper resistance. Now we come to the index that a powerhouse that moves the market, that attracts so much of buying. It is the SIP driven index, CNX MidCap. CNX MidCap almost touched the 50,000 mark this week. On Thursday, reached a high of 49,780, only 220 points short of the 50,000 mark. It closed the week 48,889, which is roughly 1,111 points, 1111 points down below the 50,000 mark. This index doesn't care about negative divergence. Negative divergences on RSI is visible very clearly, yet it tests its 9-day and 20-day moving averages. Sometimes it closes below that, below these two, yet it bounces back. Because, as you know, that in January, the mutual funds got the highest ever SIP money and mid-cap buying is continuing. So the mid-cap index is moving on and on. From a Fibonacci level perspective, its next target is 52,480. So long as the 20-day moving average is not decisively taken out. When I say decisively taken out, I mean that it should not just fall below 1 day, or it should not just test it 1 day like it did the last Friday. It tested the 20-day moving average and then bounced back during the close. So it needs to stay below the 20-day moving average at least for 3 to 5 sessions. Only then you can expect further downfall. And in my view, so long as 46,000 mark is not taken out decisively, I would say that this current intermediate uptrend in the CNX midcap is not going to go. Fifth and final index study. This index is CNX Public Sector Enterprise or PSU, CNX PSU index. Here on the last day, the index fell very sharply. It was moving up just like the CNX Midcap Index, but it failed during the day and finally closed 2.66%. It closed at 9170, that is 250.75 points down on the last day. It also tested the 9-day exponential moving average at 9050.57. What do you see in the index? The ellipse, when we covered it earlier, the ellipse showed that there had been big red candle. 2 big red candles we saw within the ellipse. What happened? Each time we saw that a green candle from below, which didn't even cover the half of that big red candle. Yet the movement continued and it went up. Here also we have seen this red candle. So what happened on the last 2 occasions, we can anticipate that that kind of a thing can happen. If that were to happen, then take it that the 9-day exponential moving average, which had been pierced in the last 2 occasions when that big red candle happened, but this time on last Friday it closed above the 9-day exponential moving average. So even that 9-day could not be taken out by the bears. So public sector enterprises, PSU stocks are still showing a lot of gumption. And chances are that they might conquer the 9,500 mark. 9478 was the high and the close is 9170. But for the CNX Public Sector Enterprise Index knows no bounds. We have enough of investors who have faith in this public sector stocks. This fall that you saw has happened on the back of some of the PSU stocks whose results have come out, showed lower profits. Profits are not as much as it was anticipated. So that could have been the reason for this fall that we saw on Friday. But we cannot be bearish going by its history, bearish right away. We need to see whether it falls and it tests at least the 20-day moving average. In this case, that 20-day moving average is at 8,606 to be precise. If that were to be taken out on a decisive manner, when I say decisive, I mean at least the index must stay below the 8,600 mark for 3 sessions. If not, it would be better that if it were to stay below 5 sessions. Only then you can say that the public sector enterprises or PSU stocks rally is in danger. This could be a course correction. Whatever the level of profitability, whatever the fundamentals, that are not coming into play. People are just about buying PSU stocks for any reason. Whether the fundamentals really justify those high levels, that's not a consideration. The consideration is PSU stocks, they are going to go up and they are going up. This is a pure momentum game people are playing. So long as this momentum game continues, the index can move up, results notwithstanding. We have covered 5 indices: the Nifty, the Bank Nifty, the Nifty Jr, and 2 sectoral indices, the CNX MIDCAP as well as the CNX Public Sector Enterprises. We are not discussing any stocks because stock discussions are hazardous at the moment. With this, we conclude our index studies. We meet you next week.